Ladies and gentlemen, we've got an exciting next segment. It's a dialogue focusing on regulatory insights. I'd now like to invite our moderator, who is the FinTech advisor of IIF, to join us on stage, Mr. Conan French. Ladies and gentlemen, this is Mr. French. Hello. And joining Mr. French on stage is the Deputy Managing Director of MAS, Mr. Ong Chong T. Mr. Ong, please. The Deputy Director General of Credit and Insurance Systems of JFSA, Mr. Motonobu Matsuo. Good afternoon, Mr. Matsuo. And we also welcome the Director General of Sweden's Financial Supervisory Authority, Mr. Erik Thedéen. Mr. Thedéen, please. So I guess it's over to you, Conan.
Thank you very much. So we're here for another amazing gathering in Singapore of 25,000 people coming together to look at how technology is reshaping the financial services industry. And this afternoon we're going to hear from three of the leading voices from markets around the world about how the regulator is playing a role in driving this innovation, how these technologies can be used to make regulatory compliance and supervisory oversight more efficient and more effective, and how they're really approaching a marketplace that's being dramatically changed by technology, and hopefully mic technology as well. Ong Chong T, I thought we might start with you, just to provide a little bit of a framework of how you, in your role as a regulator, are approaching the marketplace, what you see, and the capabilities that you're building in-house.
Well, thank you very much, Conan. And I had suggested to Conan that maybe I could kick off this session with just flashing a few quick slides, just to sort of as an icebreaker post-lunch, to get us to lead into the dialogue and the discussion with two of my fellow esteemed colleagues. And I had framed it around the theme that Conan referred to, regulation in the era of technology. And for those of you who had listened to the earlier session, including from Chairman Giancarlo earlier from the CFTC, you would realize very quickly that RegTech and what we call SupTech on the supervisory side is almost a no-brainer. It is standing still is no longer an option. It's not a question of should we do it, should we not do it. It's all about how we do it, and certainly at the institution level, and all of you represent a myriad of different institutions, you would know that you're all embarking on some form of RegTech as well, even though the business side is pushing it on the strategy and business front. And I think that's important because if you heard the morning session from Vikram Pandit, he also mentioned that there's a perception that we have a 21st century front end and a 20th century back end in a lot of the institutions. But I think that has changed dramatically, certainly in the last few years, and led by bodies such as the IIF as well. The whole space of RegTech is growing, and I mentioned various reasons, expectations, regulatory expectation, pure logical cost management, and also the boundaries and competition have transformed the landscape. So RegTech has become as much a strategic decision as the business part of it. And when you think about what all of you do on the RegTech front, it comes down to me to what I've sort of summed up here from surveillance and automation analytics to productivity, which to me is an efficiency point, an effectiveness point, and a reliability point. And I think that will certainly continue. And the whole idea, of course, is to lead to much sharper, much better actionables, because through the use of technology, data analytics, we are just much more aware, much more alert, much more agile, whether within the institution and for us as a regulator across the industry and even cross-border with our fellow regulators whom you hear from. And this is the part I want to just spend a couple of minutes on, because clearly there are challenges. And one of the questions Conan had posed to us is also to think of the challenges, the kind of challenges. And I'll just delve on a couple, because you can literally talk within each honeycomb for a long time, One big challenge, of course, is legacy IT systems and constraints. And I think you guys know that. Very often also your risk people are sort of, the DNA of these guys are also, they want to be sure and they want to know for sure. And also business silos tend to run with its own systems as well. And now when you think of RegTech though, it's bringing everything together, much more seamless, much more streamlined and able to look across and cut and slice data across. That has of course bring around that question of how do you bring the new to coexist and run along with the old and the legacy. And that, I think, will continue to be a big challenge, even within my own institution as we are embarking on our own digital journey. Then there's, of course, the whole governance and the security issue. The mindset, what I mentioned as change management and feel for technology, I think that is an important part of this change. And I'm sure you guys feel it all across your institutions as well. And we certainly feel when, on the regulatory side, we interact with many of the institutions. When you think of the risk people, the audit people, the compliance people, that feel for technology is often seen again as not as upfront or as in the stage of understanding and comfort as some of the business people. And I think we need to get that digital consciousness much more embedded in the risk people. And of course, change management to me is a management decision. It must be led from the top. It must, for us, certainly at MES, using my own example, we felt that change cannot be done by one special group of data people. It must be proliferated across an organization. So we set up a hub and spoke model where my data specialists work with all our people and all of them are supposed to have the digital technology. I will just put an ethical use there, just more by way of a marker, because clearly there are a lot of issues to do with whether we believe in what some have called the algorithmic veracity of data, the truth, data truth. How much do we take that truth as gospel truth, so to speak? Do we need to apply judgment to it? Is the idea not to apply judgment to it? Take the human out of that process. I think we need to think through because clearly there are elements of the data is what goes into it and what comes out of it is precisely whether there are embedded data bias, for example, and prejudices that are locked into the data. So we need to think through how we actually use those data, both for inclusion and exclusion reasons. But my main point as well, the other main point I'll also leave as a last point is on opportunities. I think RegTech shouldn't be seen as sort of catching up and just trying to cope with what the front office is doing. I think in and by itself, RegTech can create value for a firm. So I put insight and value creator. It can actually lead innovation as well. Why? Because they are amassing this massive amount of data from across the organization and to sort of spur the innovation and the thinking on innovation. And of course, as an integrator across the firm, this sitting apart from all the distinct business lines. And I'll just leave this slide without really elaborating, but happy to elaborate later. And I mentioned our equivalent of RegTech from MES is SupTech. We are doing quite a bit of work. We set up our data analytics group earlier this year, but long before that, as many of you would be as well, and I'm sure my colleagues here as well, we have clearly been using data and lots of data in a lot of ways, but we are trying to do a lot more to be much more focused. There are areas we are doing on the collection side, storage side, security side, and then there's one whole piece to do with engagement, because a lot of what we can do, RegTech with SupTech, is clearly collaborative in nature. So on that note, Conan, I'll pause here. I'll stop.
Excellent. Well, I think I'd like for us to continue to focus on that theme of data and the centrality of data and all of the applications and how it's changing and the need for the industry to be able to effectively store, analyze, manipulate, use, and transfer and aggregate data. And Matsuo-san, I was wondering if you could continue this theme a little bit, looking at how you have viewed open data initiatives in your market and what the implications have been for the industry and for compliance.
Thank you very much. Japan has just introduced the open API system for the banks, including local banks. And the idea, I mean, it's the same for the regulator, but we think a lot about the balance between innovation and the customer protection. That is, so if you put, if we put the safer side, if you bet on the safer side, I mean, no venture company can get into the API business. So in terms of like data API data, the whole thing is how you balance the like innovation and the safety. That is what I thought a lot about it, and so in framing this system, so we put big importance in like the new companies can get into the API business. So at the same time, the data has to be very safe. So we set the standard, and I mean we talk with banks and the FinTech companies and the data specialists, so that we set certain standards so that the data can be safe. But if you decide in the very detail, I mean, if one person can get into the security hole, I mean, the whole system is going to be ruined. So we kind of set the standard, but we didn't decide the very kind of detailed stuff, so that the detailed thing has to be open to the banks and the, FinTech companies, so that if one hole is kind of breached, but the other system can be safe. That is what we thought. So I mean, and if for the API system, the key point is one side is a FinTech company, and the other side is banks. So banks has kind of high standard in terms of like data safety. So that's why we kind of we obligate the FinTech companies to have a kind of safety contract with the banks. By doing that, the safety of the data can be achieved. And at the same time, the venture startups can be get into the API business. That's what I thought a lot.
Thank you. Well, Erik, when you think about, so that's one interesting approach to try and manage the security of data. Sweden, of course, was early in moving into a highly mobile, cash-light, very digitized society. So I was wondering if you could share some of those trends and how they shaped your thinking at FSA.
Yeah, thanks. This has been a very dramatic development the last couple of years. So when I look at my personal wallet just 3-4 years ago, I typically had a couple of notes to pay for food or restaurants or whatever. I never have any notes nowadays. I only use card. And that's only, the reason being that many of the tax drivers and shops, they don't accept cash. They only accept credit card. So we are people are predicting that we might be cash-free in Sweden in 5 to 7 years. So in many aspects, this is extremely positive development. It brings down the cost of just handling cash, the fraud risk, the money laundering risk, but it's of course some social consequences. So there's been a lot of political debate on what's going to happen with people that are used to use cash, and whether this is a civil right that you should actually be able to use it. We have a large penetration of mobile banking. I think there are certain innovations here that has been important. The mobile ID, so you could do identification directly in your mobile phone when doing bank transactions. So my kids, they do all their transactions over the mobile phone. And even I nowadays more and more. So this is actually a very dramatic change of how we run the society, you could say. And why is this happening? It's not really any government initiative. It's not any initiative from the regulator. It's more the fact that this is the kind of the cluster effect, that if everyone uses it, then you also have to use it. And that's one reason why you use the cash from the very beginning. And now cash is not used. So it's hard to say why, but this also created a very good environment for FinTech innovation. So for those who don't know Sweden that much, it's a pretty small country. Or mid-sized country maybe in European terms. But we happen to be second or third when it comes to FinTech investments in Europe. And I think one reason is that we are a good kind of test hub, if you like, for FinTech innovation. There is a lot of early adopters to any innovation, so it's a good starting place. And also I think, like all innovations, they are dependent on a solid legal ground, democratic society, well-educated people and all that. But I think that the fact that we have become so digitalized, and I think the next step, which is a opportunity but also a challenge for me and my organization, is to catch up, because we are definitely lagging after. I think we were not as digitalized and up to speed to this as we should be. And I think here I could be inspired by my friends from Japan and from Singapore.
That's actually where I think it would be great for us to go next, Chong, is maybe a little description of what the data analytics group that you've built within your organization is doing to help you catch up, but also maybe set the pace and help industry move quickly.
Thanks, Conan. I mentioned earlier that we have formed the data analytics group in April this year, just April. But to be sure, I wanted to emphasize that I think all our institutions and all your institutions, we have always been using data in many ways, some more advanced than others. MES, as you know, we are an integrated supervisor, but we are also a central bank. We are also a reserve manager. We develop the marketplace. So we have been using data for decades. But what has changed, I think, is really this sense that we need to devote more dedicated resources and to deploy data analytics in a much more systematic way across the organization. And so with the setup of what we call the DAG, it is already it's in so-called early stage. It's only been literally half a year into its setup, but it's been doing quite a few things. Really building on what the different parts of MES have already been doing for years. So, for example, the deployment of advanced algorithms. We are trying to push out much better visualization tools. We are creating much more effective data catalog system. We are now at the verge of deploying a private cloud, for example. And I mentioned the visualization platforms and dashboards they were doing, because so many of our supervisors, for example, use these dashboards to monitor and track so many things. And then we are also on the functional part. We are doing quite a bit more in network analytics. We are doing quite a bit more in text analytics as well. So you can see where all this will feature into the supervisory process, for example. And hopefully to make us a more effective regulator. But I wanted to emphasize as well that this so-called digital journey, at the heart of it, you need the cultural parts as well to go along with the digital journey. It's one thing to say these are the tools, or this is the system, these are the new systems, but you need that the culture, the softer part to accompany the transformation as well. And that's what our DAG is set up to do as well. Because we are looking at talents and skills, for example, and how to upgrade that all across MES. Because what we do not want to do is to have a bunch of PhDs in an ivory tower saying, this is the way it's done. We want digital competencies to be embedded in each and every one of our staff and to proliferate all across the organization, and which will make the tools much more useful. And we are, of course, looking into issues of governance and security and storage and accessibility and all those sort of issues. And so a big part of the digital journey, and I won't say we are there yet at all, is bringing up this whole sense of digital literacy. And I think that will be an important part of our next phase of work.
Excellent. Well, when we think about everything that the digital revolution has changed, you know, Erik, I think you had mentioned everything's happening on mobile. People are doing their transactions on mobile. They're making banking, and AML is one area: anti-money laundering, financial crime, know your customer, KYC, enrollment requirements. These are some areas at the IF that we've been particularly focused on, trying to find ways to make them more effective and efficient. For instance, you know, I think people banking on their phones still counts, you know, if it's not an in-person, in-branch transaction, by money laundering standards, that's still classified as a high-risk transaction. But what's the last time that anybody went into a branch with their passport to do a transaction with their financial institution? So I think that you mentioned catching up before, and I thought maybe you could share a few thoughts, or we could just start a conversation about how we can use these technologies, or how we keep pace. So as you think about you know, what a future customer onboarding experience and KYC compliance and AML solutions should look like, are there some things that you see or that you're trying to pursue in your market?
Well, I think it's an extremely important question. We did surveys on some of the larger banks in Sweden 2 years ago, and found that they were not up to speed when it comes to any money laundering and terrorist financing, anti-terrorist financing routines. So basically, we issued fines that were pretty severe, and the result being that they, of course, employed a lot of people in their compliance departments. I think that's kind of the first step. The next step is, of course, to make this, you know, much more efficient through digitalization, and then I think it's important for the regulatory work to be up to speed. So I'll give you a parallel. If it's a robbery and you take the PIN code from the people you abuse, then that is not legally a robbery. Although you could go with a credit card and take out thousands of euros or dollars, whatever. But if you take one single note from its wallet, then it's a robbery legally. This is a good example where, of course, the legal system is not up to speed with the reality, right? Because having a PIN code and a credit card is, of course, a robbery in my sense. And a little bit the same thing here is the risk that the kind of regulatory framework that we put out in our case from the EU system and Swedish legislation is very kind of legalistic rather than practical. And I definitely think that's a lessons learned and something that we need to kind of next phase of this anti-money laundering need to look into.
Matsuo-san, I was wondering if there was anything that you might add as you look at all of these new technologies. You talked about open banking, but think about what the customer experience is in so many different areas, and how are you making sure that the financial services industry keeps pace when we think about things like customer onboarding, enrolling, KYC?
Oh, so the new technology, like distributed ledger, can be used for for the KYC kind of stuff. So we are promoting the FinTech startups and the FinTech innovations. So we have like Finnovation Hub system, which we encourage the banks or like FinTech companies to have an experiment on the many new things. And the first FinTech Hub case is we have like 3 mega Japanese banks, and they kind of collaborate, and they use the distributed ledger technology to have a common kind of KYC information system, so that they can share kind of the KYC, and they can sometimes in the future might sell the KYC information to other financial institutions, so that they can use their KYC system. So in that sense, if the banks kind of collaborate in the kind of infrastructure, and using the new technology, I mean, they can, in a way, they can make a higher standard in terms of like customer protection.
Yeah, please.
Thanks, Conan. I thought I add something to what Erik and Motonobu said as well. Because as a number of you will know, my MD Ravi had also mentioned, in Singapore we have embarked on a project to create a common eKYC platform with the idea of taking out some of the pain points from the onboarding process, relating to data gathering, verification, screening, the storing of the information. And so the idea is whether there can be a set of golden source data from government verified that this pilot group of banks can see if it makes sense to bring that in, to take away, if you like, that first level of screening. And with the idea, of course, being improving cost, efficiency, productivity, customer experience, and so on. And that was actually a lot of resonance among the pilot group that, yeah, this sounds like a great thing to do. And those of you who tried to open a bank account would, I think, appreciate that, right? You walk from bank A, you open an account in bank B, and you sort of go through that whole thing again. So that is the so-called problem statement we are trying to solve here. But of course, as the pilot go around, you realize there are also some issues that we have to consider in such a utility. And this is something our own pilot is sort of grappling with and thinking through. One relates to the idea of moral hazard. So whether a centralized customer due diligence system that sort of goes through that and if you did not pick up someone whom you should have picked up, would there be some sort of regulatory forbearance, who is accountable, responsible for the use of those data, and those sort of issues we have to think through. And also then there's the behavior part of it in utility, whether they are non-risk-based reliance, meaning you just sort of take away the human judgment and you just leave it to a platform to say this guy is onboarded and cleared or not. And whether inadvertently there is a bias or collective de-risking of certain people where they just could not get onto to open a bank account simply because the system and the data suggest they should not be onboarded. And so those judgments have to come in. And then there's another part of it, of course, is our banks, as I'm sure my colleagues here as well. Many of them are customers that may not be from Singapore. They will be from outside Singapore and they open bank accounts here. And so really, how do we get their data and how do they get onboarded? And whether there is a way for regulator to regulator, government to think of some collaborative use of again, this so-called golden source of data. Because otherwise, a pure domestic utility, again, will be limited in solving some of their pain points.
And I think that would be a great topic to see if there are some commonly held points here. I know that at the IF we have member organizations who can't share data and information from one branch of theirs to another branch across jurisdictions, which is a problem. Aggregating data and sharing data from one institution to another within a single domestic market is again a problem. So AML and KYC is a place where we've seen amazing advances with technology that have achieved things in, say, fraud prevention. But today we don't have the data sharing and data management structures in place for them to have the same impact in efficiency and effectiveness in institutions. And we think that this is a particularly important problem for the industry and public sector to come together to solve because we see numbers of, say, up to 20 to 30%. The cost of AML and KYC compliance might be equal to 20 to 30% of net profits of the bank. And so when you have that level of resources committed to something, and then on the other side, we're seeing that maybe estimates are 1 to 2 to 5% of financial crime is being caught with the current system. We think that this lays out a pretty strong imperative to do something different. And we also think that in the area of RegTech that we're all interested in and focused on here, this is the first of one places where the opportunity for more efficient and effective solutions is really clear. and the problems are fairly identifiable as well. So if we can start to work together between industry, policy setters, and technology entrepreneurs, and solve some of these problems in AML KYC, it'll really provide a nice template for continuing to make all of supervision and compliance just much more efficient, automated, and successful. So I was hoping that there might be some additional views from colleagues on the panel.
No, I think you're pointing out a very, very difficult issue, and that's the data privacy. You know, we have come across this also when discussing in other international fora when it comes to market manipulation and issues like that to kind of track down the people if they are abroad, and that creates a lot of problem. It seems like kind of the data privacy legislation was in a way formed because it takes ages to do it. In Europe anyway, it was formed before we had maybe the main discussion of anti-terrorism and anti-money laundering. So when it's finally ready, it seemed maybe to be a little bit too strict given the threats we see when it comes to anti-money laundering. I think this is an issue, is a subject where we should have collaboration between the banks and the regulators, between regulators and, for that matter, consultants, because it's nothing to do with competition or cartels or something like that. It's something that is a public good to do, actually. So I know that the banks are collaborating when it comes to standards and how to do this in the best practice, if you like. But the data privacy is definitely an issue here, and I think this is going to be widely discussed because, again, I think it's a lagging legislation that was brought about when we had different discussions around terrorism and money laundering.
And it's also happening in an age where people are gleefully clicking away all of their privacy rights to see the next funny video meme on their platform. So I think that we're entering an age of society where some of these privacy as a human right needs to be sort of rethought and re-rationalized within the financial services industry because the trade-offs are pretty dramatic at the moment. So I thought maybe we'd pivot next to another topic that's been hot in the news that I'm sure is taking your time, and that's, I think that as the blockchain and cryptocurrency market has continued to evolve and develop, it has been a space that is manifesting change and exciting opportunities in everything from, central banks evaluating cryptocurrencies that they could issue themselves. Blockchain continues to demonstrate its value and interest to the community while also seeing some pretty remarkable speculation in the site. ICOs are an innovation that has, again, unfortunately attracted the attention and focus of a lot of folks who might not really be wholly engaged in developing code or protocol or systems. So as you look at this entire spectrum of blockchain and distributed ledger technologies, what are the focus points that are most important for you? And open question, I don't know who wants to dive in first, or perhaps
I can just pick up on the ICO. We issued a warning from the Swedish FSA when it comes to ICO, a consumer protection warning. The other day, and the same thing has been done by many other regulators, I think, maybe for both of you. I think this is a good example of a regulation or not regulation. So typically all regulation we have today has come about because there's been failures, sometimes major failures. So Lehman Brothers, that became much stricter banking regulation. We have had some failures when it comes to crowdfunding, so we are now looking into more strict regulation for crowdfunding. So ICOs is, I'm sure, a lot of good things with ICOs, but here I would call for some kind of self-regulation. Because if you just say, we don't want a regulation because this is a FinTech and a very special and it's not really something that need regulation, in the end of the day, if you end up in problems, you will get regulation. That's how the whole dynamics when in politics and regulators and consumer protection works. So I think this is a good example. If you want to avoid regulation, be sure to have a strict self-regulation and a discussion within the industry. Otherwise, it will come. And I think the ICO is one good example where you are only, I think, waiting for some kind of regulation coming from international bodies.
I can add one example. So Japan is the maybe unique country which regulates the virtual currency vis-a-vis legal currency exchange corporations. So and we introduced this regulation legislation system because there was a G7 agreement that the virtual currency vis-a-vis legal currency should be registered or like should be registered so that the money laundering can't be done easily. So we introduced this system like 2 years back, and we kind of starting the legislation for the Bitcoin and the legal currency exchange dealers. And the result is, so we introduced this infrastructure, I mean this system. And after that, the Bitcoin trade is kind of boomed in Japan. So I mean, so people think that the if the regulatory authority kind of registered the dealers, I mean, so they think it's kind of safe. They think it's kind of safe. So that's the other thing that regulators should think of. I mean, so if it is registered by the regulator, I mean, the people tend to think it's a kind of safe asset or kind of authorized. So that's the other thing you have to kind of consider if you're dealing with kind of ICOs or like virtual currency stuff.
Thanks, Conan. I echo the comments made by my previous two colleagues here. The whole idea, I think a number of you may have seen the advisories that MAF have been putting out together with the Commercial Affairs Department, which is our white-collar crime buster organization or entity here. But also just yesterday, we have put out yet another paper on ICOs or digital coin offerings, and I hope you guys would look it up as well to sort of put more clarity on some of the risks and what we will regulate and what we will not, and to again also alert and caution people and speculators, investors to be sure to know and understand what you're getting into. And I know yesterday there were quite a few discussion and sessions around ICOs as well, so I won't add to that. But I'll just say we also want to distinguish ICOs, this whole development of ICOs, from the whole thing which I guess Conan posed to us about distributed ledger technology and blockchain. And that shouldn't, I hope, distract us from what the DLTs can do and that whole development there, which can, I think, transform the landscape in many ways as well. So many of you know in Singapore, the MES is spearheading something which we call Project Ubin, that you can actually Google it and you'll find it as well, which is a collaborative project where we are exploring the use of distributed ledger technology for clearing and settlement of payments and securities. And you can sort of think of quite a lot of possibilities of good uses for it. Again, putting ICOs aside. So you can think of how it can help in supply chain management. You can think of how it can help in the insurance space. We talk about KYC as well. That clearly is something that opens up for distributed ledger technology. There are all sorts of cross-border transactions that avail themselves to DLTs as well. So I think it's something we should sort of, as regulators, also keep up with. In our case, we are actually trying to shape some of that collaborative work where it involves financial services. But the ICO thing, I hope, will not distract us from that as well.
You mentioned working together to try and build some of these positive applications, and I think that's the next theme that I'd like to have us look at for our last theme here, and that is really how do regulators and the industry come together and work together to really adapt, adopt, evolve, move to a new technology stack. The space and the waterfront that needs to be covered is fairly massive and huge. And so how are your organizations building those either structures or capabilities to work with industry and evolve them? And what are some of the principles that you're employing when you're doing that? So Erik, I thought maybe we'd start with you and how at FSA you're approaching working with industry to adapt and adopt new technologies and evolve your systems and processes.
No, it comes very timely because we are just producing and finalizing a report to our government on what approach we should have. And I think there is no perfect, no one size fits all. I think the approach by MIS, for example, in Singapore, it's not the same approach as in Sweden, but both Singapore and Sweden has successful FinTech industries. We don't have any promote the industry remit. So basically we are a supervisor. What we have come to the conclusion more and more is that if we work more in dialogue with the FinTech companies, if we try to have a special unit or a team that work closer with them, that will actually make us better as regulator. We will understand the business better. We will understand the risks with the different business initiatives, and hence it will make us better in our remit as consumer protectors. So I think that's the approach we have. It's not really to push the industry, but rather to learn and in that way, I guess, to some extent also make it easier to innovate. There is some push from the industry that we should be more kind of promoting the industry. So far, we've been a little bit reluctant because of basically the tradition we have, being an authority. But we need to have a much closer dialogue. That's for sure.
And Matsuo-san, you've I think taken some steps to make your organization more open to innovation and to the entrepreneurs. So maybe if you could share a little bit about that.
Yeah. Like Singapore, we have FinTech support system and FinTech experiment hub system. So I'm in charge of the banking regulation, mean rule making and the insurance rule making and FinTechs. But mainly these days, I see more FinTech people than like banks or like insurance. And the basic idea is what is good for the customers or for the economy. And if it's good for economy, and I mean, it doesn't matter it is done by banks or like fintechs, but if it's good for the innovation, but you have to care about the consumer protection, of course. But so I mean, the basic idea is to serve for the economy and to serve for the customer, and which is better, and which is, of course, thinking about safety, etc. But by this thinking, we kind of promoting fintech as well, and at the same time, I hope that banks can do the, I mean, for the customer-oriented, very good business, doing very good business is also very important. But the ultimate goal is customer and the economy. So that's how we think. Maybe Singapore might be the same, but this is my thinking.
So, Chong, I think we're sitting in a fairly dramatic example of how the MAS at Singapore is engaging with the industry and driving the conversation. You also have a regulatory sandbox that you're using. We've talked about your data analytics group of how you're developing these things in-house. What are some of the things that you might share with an audience around the world, some of your early learnings, or what are some success stories, or just anything that as you look at this amazing effort that the MAS has had over the last 2 years to really pivot and look at the use of technology, what are some of the main takeaways or early success stories that you're starting to see at the industry, and where you're starting to see it make an impact?
Thanks, Conan. I would say, given what the institutions are doing on the RegTech side, and you have heard it mentioned quite a few times, we have decided we need to do the complementary part of that, which we call SupTech. And that RegTech and SupTech collaboration, I would say, is critical. Because otherwise, all the digital things that the institutions are doing and how they are doing risk management and compliance monitoring and surveillance, and we get a lot of that information, it will be much harder for us to do sense making from that. To put it in other words, it is difficult to have a digital industry with an analog regulator, because that again brings back to inefficiencies, and we will ask for certain submissions done in a certain way. And you may have heard yesterday our MD talking about everything to be submitted with us machine readable, for example, you know. And so those are the kind of things we need to do in partnership with the industry. So the first thing I will emphasize is it must be collaborative and it must be a partnership. The other thing I would also emphasize, and I alluded to that earlier, is do not overlook the cultural dimensions to the transformation, because it is not easy when you move from entrenched practices, legacy systems to transform. There are many things both to do within the firm and across firms. So when we think of data collection, for example, across an industry, and here I'm talking banking, insurance, asset management, capital markets, the exchanges, we got to think through how do we do this in a sensible way, and yet taking into account the idiosyncratic differences between sectors. So those are a lot of the kind of issues that again require a partnership and a collaborative approach. And also within each firm, I'm sure many of you would recognize that, it has to be supported by management, boards, and it must also be something that energizes people, and everybody feels that going digital is their business, is their day-to-day business. And not just because there's some group in an ivory tower saying, let's go digital, guys, and everybody else has to be pulled along. I think that cultural governance bit is an important part of this whole transformation, both on the industry side and for us as a regulator.
And with that, I think maybe a big round of applause for views on how to make the systems more efficient and effective from Sweden, Japan, and Singapore. So thank you very much, everybody, for joining us for the conversation today, and we look forward to the next session.